Hey, what's up YouTube? This is Leo with DRIPCalc, and in this video I'll talk about 3 AI stocks that I've been buying on the recent dip, and I will tell you why I've been buying the stocks, what I think about their growth prospects. In a nutshell, I think these 3 stocks will have amazing performance. One of them is NVIDIA, as you can see over here, but there's 2 other stocks that I also will talk about and why. Okay, so first of all, this video is not a financial advice. I am not a financial advisor. I am just telling you what I do and how I invest in the stocks and why. All right. Second of all, guys, please smash the like button, subscribe to the channel. It really helps grow the channel. We're still under 1,000 subs, so it would help tremendously. And third, when I invest in these companies, I don't buy the stock outright because I have limited capital. So what I do is I buy long dated calls or leaps, and I buy those in the money. I do not buy out of the money call options, and I'll explain to you my logic and all of that. Okay, so the first stock that we're going to talk about, it's actually not NVIDIA, because all of these stocks, they basically depend on the success of NVIDIA, but these 2 other stocks, I think they will have massive performance, probably do even better than NVIDIA itself. Stock number 1 is Arista Network, and the other one is Astera Labs. They're both related to NVIDIA, and I'll tell you like the whole picture, and also we will look at some earnings and my predictions for what's going on. Both Arista and Astera are reporting earnings. One of them is today, the other one tomorrow, so this week. So yeah, Astera is reporting today. Actually, both of them reporting today after the market close, May 6th. So let's begin. Okay, so top level overview of Astera and Arista. Okay, so Astera makes networking chips, controllers, retimers, repeaters, and a lot of their stuff, a lot of their products go directly into NVIDIA PX200 or H200 servers. So if we look over here, sorry. So here's the B200 server, and you can see right here, these chips over here, they're Arista chips or Astera Labs chips, and they're networking chips. What they do in a very simple way is they amplify the networking signal, because when the signal travels over longer distances, it loses its strength or potency, and what these chips do, they amplify that signal, making it stronger and make it travel faster. Basically, when these super fast servers are installed in a rack, they need to communicate not only inside the server itself, not only between the GPUs, but also from server to server. And the slowest component in this whole assembly is basically the bottleneck. And at some point, it becomes like the GPUs may be very fast, but then if you create a bottleneck in the networking, then your whole system performance degrades, and you're basically wasting money. And so Astera makes these retimers as well as other chips, but these retimers, they go directly on the NVIDIA servers. So NVIDIA is one of their main customers. Okay, so Astera Labs, ALAB, their success directly depends on NVIDIA in a large part, and also NVIDIA is their biggest risk, because NVIDIA, they want to produce everything in-house. They don't want third-party suppliers, so I am sure they are working on some kind of networking solution. The good thing is that Astera, they specialize on this stuff. They have the patents, they have the know-how, and even if NVIDIA gets into this game, it will take them a while. Okay, so they're using Astera Labs chips, and they probably have other clients. Well, they definitely do have other clients, but NVIDIA is their biggest client. All right, so Arista, they are actually in competition with NVIDIA, and yet they've managed to grow very fast. You can see the revenue growth is 25% per year, which is actually a little bit slower than NVIDIA. And if we look at NVIDIA revenue growth, guys, it's an amazing 77%, or almost 78% year over year. But yet, Arista is not just NVIDIA's client, or rather, they're not a client of NVIDIA, they're a competitor. They're basically, they create the high-speed network switches, which connect the racks of NVIDIA servers and other AI servers and high-speed computing clusters together. So their main competition is actually not NVIDIA, it is Cisco, but in high-speed and high-performance computing, Cisco has kind of lost that battle already, and Arista is considered like gold standard, so to say. Their clients are Meta, Google, basically all those hyperscalers, they buy Arista. Now the competition is actually NVIDIA, because NVIDIA has its own networking product, which is but a lot of people don't like NVIDIA's product because it's proprietary, it's more expensive, and it's less flexible in terms of interconnectivity with other products. So NVIDIA says that Ethernet switches are no good, meaning like don't buy Arista stuff, buy our stuff, but at the same time they're working on their own Ethernet switches, and they bought a company a few years ago to do exactly that. So they have a weird messaging. But actually, it took me a while to find this metric, but I think it's very interesting. So I looked for networking in this document. So what page is this? Page 80. So if we go to the top, this is I'm not even sure what this form is, but basically this whole form has 68 mentions of word network or networking, and the last result shows the actual last year revenue of their networking business. Okay, $13 billion they made on networking, and it's all those switches and chips and fiber optic connectors that they sell along with their AI servers and all of that, all of their data center stuff. Okay, so the actual compute, they made $102 billion on it. So it's a big chunk of the whole data center revenue for NVIDIA for the last year. If you look over here, the growth in networking is about 50%, whereas the growth in compute or the GPUs is about 150%. So the compute is growing much faster, but still networking is a large business for NVIDIA, and they want to compete with Arista networks. However, Arista also sells their switches to where you have AMD servers and all the other stuff. So while NVIDIA is their competition, I think they're going to do just fine. And this is basically the top level explanation of what these companies do. With that said, let's look at the financial performance of both of these companies and where I think it's a good time to buy them or at what price. And today we'll have the latest quarterly numbers, and I will probably make an updated video based on the quarterly results for both of these companies, ALAB and Arista. But let's talk at this time about NVIDIA. So basically, I think NVIDIA is an amazing company. I think currently it's a little bit underpriced, but of course, if it was in the $90 range, it would be even better. Over here, it dropped to like $94, $95. Just 2 weeks ago, guys, this was April 22nd. On April 4th, it was $92 or $94 over here. And then just 2 weeks ago, it was $96, $97. So it was still cheap. Here it's a little bit more expensive, still a decent price. I am not actively buying right now because I already established my position. Okay, but let's take a look at the financials. I think they're amazing. By the way, guys, so I added the year-over-year growth metrics and TTM, or last 12 months, trailing 12 months revenue. So if you look at over here at October 27th quarter, so when it shows revenue, TTM revenue, that includes this quarter and the previous 3 quarters. So it's TTM for that quarter. Like this is a full year, 2024. It's not their fiscal year, so it's like really difficult to do this with NVIDIA. It's not their fiscal year; it is their it is the calendar year. Well, at least here, that's why we don't call it quarter 4, because I think it was quarter 1 of their fiscal year. I'm not sure. It doesn't even matter. So in the last quarter, the trailing 12 months revenue was $130 billion, and the year-over-year growth was 78%. Like look at this bar right here. So here you have net income and revenue, and this looks a little bit cluttered, I know, but I wanted to provide as much info with these charts as possible. So you have year-over-year growth for both of them, net income and revenue, and here these charts are separated, so you have less clutter. Basically, a 78% revenue growth year on year. And if we look at if we compare it to the quarter a year ago, the year-over-year growth was 265%. That was amazing. So from basically $6 billion to $22 billion. So yeah, that's crazy. it's unlikely they'll continue growing at these rates, but guys, even like 50-60% annual growth is amazing for a company this big, for the revenues this high. Okay, and I think even with the Chinese ban on both sides, on like the US does not allow NVIDIA to sell to China, and now the China says NVIDIA cannot sell in China. So even with the, like they did a press release a couple of weeks ago or a week ago that they might take a haircut of about $5 billion due to China. I think they still do amazing. Let's look at their EPS, earnings per share, growing at 81.5%. It's quite amazing. I think this year they'll bring in about $200 billion in revenue in 2025. You know, because our starting point, unlike in the beginning of the year when it was 26 billion, now we're going to be about 42-43 billion dollars. And if we keep growing, I think we will be at 200 billion dollars in revenue this year. Now, I'm not making projections because, you know, the economic cycle is still uncertain. But as we know, Meta said they will be expanding their AI investments, their CapEx, and all the other hyperscalers right now saying that they will continue to invest in CapEx and AI as much as they have been doing and as much as they were planning to do. They're not cutting, they're not scaling back. So yeah, this year will be tremendous, even with the Chinese, you know, bad news from China, from NVIDIA. Anyway, so with that said, guys, let's take a look at the revenue. So a year ago quarter was $22 billion. Now it's 40. So that's almost 100% increase, almost 80% increase. That's a lot. Okay, but if we look at the price chart, let's look at 1 year. So over here, we're basically the same price as a year ago. Okay, when it dropped over here. So right now we're a little bit above that. We're about 25% above a year ago price. Okay, so 20-25%, which is pretty good. It's very good. But look at where the net income stands. So our net income went up 80%. So while the price went up 20%, the net income, the profitability of this company went up 80%. Okay, the revenue went up 80%. I'm rounding these numbers at 77.94. Okay, so let's call it 80 because we're pretty close to that. The net income. So what that means is that your price your PE, price to earnings ratio, is dropping like dead flies. That means the company is becoming supremely inexpensive. Okay, and I'm loving it. It is. You can see all the revenues, all the metrics are going up. If we hide this, even the data. Well, no, the data center. Let's hide gaming. Look at this. So basically their data center business is about 90% of the total revenue, even more. Okay, and you can see here the China was about $5.5 billion, the revenue from China. So we might take a haircut on that. You know, officially they will not be selling in China, but come on, we all know that Chinese, they buy NVIDIA chips through Taiwan, they buy them through Singapore, through other places, and so those chips are still going to China. They're just not booking the sale in China. Okay, those chips, the Chinese AI companies, they still want the best in class. And Huawei, yeah, they said we're gonna make a chip that will compete with NVIDIA. Yeah, it might be close in performance, but you know, those chips, they sometimes tend to die abruptly. So after a few years of usage, the people will just like, no, I don't want to deal with this garbage. I want to go back to NVIDIA. So that's my personal opinion. Okay, so basically, I still see a bright future for NVIDIA. The AI demand will only go up, and therefore the NVIDIA will do great in terms of earnings. And I think the company is underpriced. If it gets back into like low 100s, maybe even below 100, I will be buying again. Okay, and with that said, let's transition to Arista. Again, they sell high-speed network switches, and they are sort of reliant on NVIDIA, even though they're in competition. If NVIDIA does well, Arista will do well. Now, as far as Arista goes, let's look at the price chart. So over here on April 4th, it dropped to like $65, and then it was in the $67 range 2 weeks ago on April 21st. Okay, and that's when I was buying it. Right now, I think it's a little bit overreach valuation. Over here, it was basically cheaper than in the last 12 than a year ago price, and it went up as high as $134 over here on January 22nd. It closed at 129. So I think those prices are very attainable in the near future, maybe within a year. And my personal price target for this company is about $170 within 12 to 18 months, maybe even faster, especially if we avoid the recession and the stock market starts recovering. This company will do well. Okay, so let's look at its metrics. So revenue growing by 25%. Now, they were saying that they might slow down in revenue growth, okay, but they also said that in the previous quarter, and that didn't happen. So if we look over here at estimates for this company, so they always in the last 6 quarters they always beat the estimate by about 1 to 2%. So that's nice. That's on the revenue. On EPS they beat even harder. And so the companies, the analysts are projecting 27% year-over-year increase in first quarter of 25. So the results they announced today, so they're expecting 1.97 billion, which is 26.83% higher than a year ago quarter. Okay, so I think they will continue to do well. Now here they project a slowdown in sales to about 15 to 20% range. Okay, and at that time the valuations will get not as rich. But I think when the stock was like $65, $67, I think that was the time to buy. So if it dips on earnings today, I think I will increase my holding. Okay, and basically similar for Arista, but Arista just had their IPO recently. You can see for the year it's up about 16%, or no, rather like about 15% up for the year. But their IPO was just a year ago, like 13, 14 months ago. You can see March 20th, that's the first day of trading. And so they opened at $62 and we had below the IPO price over here, like 54. So that was the time to buy. I started buying around like $62, $63. So a little bit late to the game, but now it's $72. So I'm thinking it's a little bit not overpriced, because if you look at Astera, so they work directly with NVIDIA, they sell directly to NVIDIA, and most of their products basically go straight into Blackwell servers. And so you can see the revenue growth right now, because it's a new company, 180% year over year, 206%. So, but their profitability is still, questionable. Sometimes they're negative. Last quarter, they made $24.5 million. So it's a smaller company. You can see just $12 billion market cap. Okay, but they're growing fast. They don't have any debt, so they don't have any like ongoing expenses. They're actually making interest income on their cash, which is good. They have about 9% of cash to market cap, so that's not bad. For every dollar you put in a company, you get 9 cents in cash. So they basically can continue growing without worrying about making the interest payment and whatnot. So yeah, their metrics are great. The only thing, they're still diluting shareholders, which is not good. But the projections, so for this quarter, analysts are expecting 170% year-over-year growth in revenue. So that's amazing. And going forward, you can see they're projecting 40-30% revenue growth. Now, analysts are not always right, but they're in the ballpark usually. And so this company will do well. In fact, the stock performance over here, it went up as high as like $147 in December, and then in January, 143. So it did well. And so this was really good opportunity to buy over here in April. Now, if we get that opportunity, I'm going to buy a little bit more. But basically, the company is doing amazingly well. Now, if we switch back to Arista, let's look at there. So you can see the company was growing until basically COVID. Small slowdown, and that was before AI, guys. They were growing even during pre-COVID years, and the growth was like 16, 17, sometimes 20, 25% per year, which is also not bad. But here with AI, their growth just accelerated. And so I think regardless of, even if there is a temporary slowdown in NVIDIA, in AI, CapEx, I think these companies will do amazing long term. And the return on Arista network, 36, almost 37% compounded annual growth rate. It's amazing. So yeah. All right. So now, how do I invest in these companies? Okay, so let's talk. All right, guys. So number one, I like to make ongoing income by selling covered calls on my shares and on my options. And so to sell a covered call on Arista, you would need $9,000. And I don't want to spend so much money to be able to sell covered calls. So what I did when Arista was about, let's look at 1 month, when they were like in this range, I was buying covered calls on them, long dated covered calls for $60 and $65 strikes. So that's in the money, and they were relatively expensive. They were about $22 to $23. At some point, some of them were like even in $19, $18 range for June of 2026. So still more than a year, and you could get the $65 call for like 18 bucks. Now it's much more expensive because the price went up by about $15. But basically, you could buy, let's say, a $65 call for January 2027, okay, and that will cost you $3,700, all right, not $9,000. And on it, if your broker or your options buying and selling level allows it, you can sell poor man's covered calls. Okay, so what you could do is you could sell a call. Now this is my IRA, so it's limited margin. It's not going to show you exactly, but keep this number in mind. So $3,700, $3,750. So you could sell, for example, like a June covered call for say 107, or if you want to go a little bit further, September, let's say $115. You can collect $3.55 right away, and so that would make your cost for the $65 call, that would make it $3.50 less, and so you would have to pay $3,400. And if you're obligated to sell, remember the break even on this, so 65 plus 37, that's $102 something, and you would be forced to sell for $115, so that's already $12 in income. But that $12 is about 33% in like 3 months, 3.5 months, and then you collect another $350 on top of that, so that's about, call it almost 17% in 3 months. I think it's a great return, and if the stock never gets to 115, you don't have to sell, or you can go for, let's say, $120 strike, so to kind of reduce the probability of being assigned, and you still collect $2.70, so that makes your cost about $35 to buy the June or January 2027 $65 call. So that's basically how I was doing it. But again, these options, they were much cheaper. A couple of weeks ago, they were like in $22, $25 range, and so I opened a few of those, and my cash outlay was much less. And right now I'm up about 40% on my position. So even if I get assigned, I think my strikes are around $105, $110, but my break even at the time was like 80, okay, and my up, or like 82, and I paid about $20, $25 per option contract per spread, and so I stand to gain about 70 to 80% profit if I get assigned. I probably don't want to get assigned, and therefore I will either roll or do something with it. But anyway, I have a lot of upside, so even if I get assigned, 70% profit in 4 months is not bad. Okay, now same thing for Astera, but the options on Astera are a little bit more expensive. And so when I was looking at it, I was basically, I didn't like my break even on this, and so I was going for a $35 call. That was about 50% in the money. And if you look here, so the delta on it is about 90. So if the stock goes up by $1, you collect about 90 cents, or the price of your call option goes up by about 90 cents. Okay, so at the time it was like 86 delta. So for each dollar that the stock price goes up, my option contract went up by 86 cents. So I was buying $35 calls, okay, for January 2027, and I was selling, you can sell July, for example, that's 2.5 months away. So remember, your break even right now would be almost like 80 bucks. Okay, so to make money on this, so yeah, if we look over here, the break even is $79.30. It's kind of on the expensive side. Again, this stock was $55 couple weeks ago, 53. So that's when I was buying in the $55 to $60 range, and I'm hoping that the stock goes down a little bit down temporary, so I can increase my position, and if not, I might get assigned and I'll make a decent profit. But basically, so if you were to do it today, this is what I would do at 35, maybe $40 call, but that's kind of expensive. $81 break even, still not bad, and you're putting up about 60% of current price. You don't have to put up the whole, $7,000, and then you can sell cover call expiring, let's say July. So we have $81 break even. So even if you do like 90, okay, so oops, see, this is because I we'll have to do the math in our heads, but $41, and then July sell. So about, if you do $90 strike for July, I wouldn't. I think it's gonna get there. Oh, maybe not. I mean, $90 is a big upside. It's like 30% from here, not bad. So this would go down to about $38, $38.5. Okay, so that makes your break even 78.5 to 90. So you're making about $11.5 in 2 months on investment of 3,000. So 30%, give or take, not bad in 2 months. Profit. If you want to go a little bit further out, say September, and you want a higher strike, say $100. Okay, so you basically would pay about $36 today for that spread, $100 spread, and your break even would be much nicer, about $77. So $23 upside, not bad, and that would be about 60% upside in 3.5 months or 4.5 months. Not bad. So that's what basically I was doing, buying $35 calls, and my cash outlay is much smaller than having to buy 100 shares. Now, some people don't like options because your break even is higher than the current price. But again, guys, I'm up 40% on my Arista and about 20% on Astera, and yeah, this leverage. So basically, you agree to have a slightly higher break-even price than today, but your cash outlay is much smaller. Okay, in case of a $40 call on Astera, you're putting down only $4,100 right now instead of $7,100 having to buy 100 shares. So that's how I do it, and to basically subsidize the cost, I sell a 2 to 3 months out covered call, and that usually gives me 10% back, give or take, on the current cost. And yeah, this way, my hope is, even if I get assigned, I make good profit. I hope not to get assigned, so I can continue selling covered calls on the stock. So today we will see what happens after earnings. I'm going to post this video right now, but hopefully, like looking at other stocks, Amazon, Apple, even Palantir, they all dropped on earnings, and so I don't think that Arista and Astera will continue climbing until NVIDIA reports. And if NVIDIA climbs on earnings, then these stocks will definitely shoot up. They already did after, not after Google, it was Meta, and what was the other stock that reported together with Meta? It wasn't Google. I don't remember, but basically on the day when Meta reported, and they said they're increasing their investment in the in AI, in capex, these stocks, they shot up over here on May 1st. Boom. See, that's a big jump. Same with Arista. Boom, $6. That's like 8% jump in 1 day. So if NVIDIA reports good earnings and the stock jumps, then these companies, they will do amazing. If NVIDIA drops on earnings, these stocks, they will also dump. So basically, if I was investing, I would not be buying right now. I would wait for the earnings. Probably my guess is that both of these stocks will dump a little bit on earnings, maybe 5% down, maybe 10, and that puts you back to about $82 range on Arista, which is already more manageable. I think it's a little bit on the expensive side before NVIDIA reports, and looking at how the other companies lately, like Palantir, had an amazing quarter and they're down 12%. So yeah, anyway, guys, thanks for watching. Again, this is Leo. I'm asking you to smash the like button, subscribe to the channel. If you have any suggestions or comments, leave them in the comment section below. I am using this DRIPCalc Pro stock research tool. We also have a compare tool, where you can look at both of these companies side by side. By the way, I should have probably done. And so this compare tools, it basically shows you the same reports, but side by side for two stocks. So here we have Arista and Astera. So all their earnings, free cash flow, net income, cash, revenue, EPS, and so on. Basically, if you want to try this stock research tool, we offer for our YouTube viewers 30% lifetime discount, as well as 2 weeks free trial. So I'm going to leave the discount code with the link in the description for this video. If you want to try it for 2 weeks completely free, no charge. If you don't like it, cancel. And if you enjoy it, you get to have a 30% lifetime discount. So even when we raise the price, your price will stay the same, and also by cheaper by 30%. Okay, guys, so with that said, thanks for watching. Once again, smash the like button, subscribe to the channel. I will make a follow-up video when these two companies report their earnings later today, and I'll analyze them, and then we'll see what's going on. But realistically, we have to wait for NVIDIA to report their earnings, and that will be at the end of May. So by then we'll know how the whole AI market works. But I really like all three of these companies. I am invested in all of them, but again, I don't buy shares. I buy LIPs, and I basically wait for a good discount. And I already know my valuations. Even if they, report that next quarter might be a little bit slower, I know that this company is growing tremendously well. And so even if I have to wait a couple more months, I give myself enough time on the LIPs to basically play out. And by the way, I didn't explain why I buy in the money calls. So basically, out of the money calls, it's a gamble. Yes, they're much cheaper, but the price has to get to that level. Let's say on Arista, if you want to spend only $8 versus or $9 versus $40, you can buy a $140 call for January. And if the price goes, say, to $170 by then you make a lot more money than I do, because your investment, you will compound much better because it's much more levered. But if the price doesn't get there, your call expires worthless. Let's say there's a recession that starts right before this and the stock drops. Okay, by buying in the money call, so I think I was going for $60. Even if, let's say, the price of Arista is $70 back then, and I do lose some money, but still it's worth it for me, because worth it in regards that I will still either exercise or do something with the call when the price gets there, because it's below current price, and I think $60 is fine, even though I paid realistic $23 to buy that call. Again, I didn't pay $41. I paid $22, $23 on average. So yeah, I might lose a little bit, but basically it's very unlikely that Arista will be $60 in a year and a half. But it is probable that it may not hit 140, in case there is a recession or something like that. So that's why I buy in the money call. I secure the future ability to purchase it a little bit more expensive than it is currently, but still at an acceptable rate, even if the price drops in the future. Okay, and also because my break even is pretty close to the current price, I can sell covered calls on it going along. Whereas if you sell a covered call on $140, on $140 call, you have to be above your break even. So you would have to sell a $150 call to just break even. Okay, and $150 call, even for January, even if it's available, I'm not even sure, it doesn't pay very well. It pays very little. So that's why I buy in the money calls. Guys, thanks for watching. I'll see you in the next video.